Welcome back everyone. As always, it is a blessing to be here. On Saturday, I told you XRP had broken away from Bitcoin, and I gave you 3 numbers to watch so that neither of us would have to guess about what came next. Those numbers have now moved, and one of them moved in a direction that makes my Saturday framing look incomplete. So today is the follow-up, and I am going to start with the part I got least right. We start with XPR Network as always, and XPR has been the most consistent signal on this board for a week and a half. XPR is at about 0.3 of a cent. Over the week, it is up around 12%. Over that same week, XRP is up around 47. So the smallest name on my screen captured roughly a quarter of what the large name did in a week where the whole sector rose. I have now said some version of this in 3 consecutive videos, and it has been right every time, which is worth stating plainly because I am about to tell you where I was wrong. Here is the correction. On Saturday, XRP was up almost 7% while Bitcoin sat flat. And I told you that was XRP moving on its own rather than the market carrying it. That was accurate as a description. Where I was incomplete was in how it landed, because when you tell people an asset has decoupled during a rally, what they hear is that it has broken free in a good way. Decoupling has no direction, it just means the correlation loosened. And on Monday, that same loosened correlation ran the other way. Bitcoin was up around 1.5% and XRP was down close to 3%. Same decoupling. Opposite sign. If you took Saturday's video as a reason to feel safe, that is on me for not saying this clearly enough at the time, so I am saying it now. So let me define it properly because this word is going to keep coming up. When an asset decouples, it stops taking its instructions from the broader market. That is genuinely informative because it tells you the buying or the selling is specific rather than sector-wide. But it says nothing whatsoever about which way it goes. An asset that can rise without Bitcoin can also fall without Bitcoin. And this week we have now watched it do both inside of 3 sessions. Now the 3 numbers I gave you on Saturday, because the entire point of naming them in advance was so that we could check them without arguing about vibes. Number 1 was the RSI. On Saturday, I calculated it at 85.9 and told you it was the highest in 260 days. It kept climbing to about 86.8 and it has now come off to around 80. So it is cooling, which is what you would expect after a pullback, and it is still comfortably above 70, which is where overbought territory starts. That is the ordinary way an overbought reading resolves. By the way, it does not usually collapse. It bleeds off while the price goes sideways or eases, and that is exactly what we are watching. Nothing about that is alarming, and nothing about it is bullish either. It is the stretch coming out. Number 2 is the one I care about most, and it is the one nobody will put in a thumbnail because it is boring. On Saturday, the 50-day moving average of the XRP to Bitcoin ratio sat about 8.9% below the 200-day. Tonight, it sits about 8.8% below. 3 sessions, one of the biggest weeks XRP has had in a year, and that gap closed by roughly 0.1 of a percentage point. And that is the single most useful thing I can hand you tonight because it is the honest scale of what happened. A 50% move is enormous in your account, and it is very nearly nothing to a 200-day average. Those long averages are built specifically so that one dramatic week cannot flip them, and this dramatic week did not flip them. If this is the start of a genuine trend change, that gap grinds close over many weeks and you will be able to watch it happen. If it is not, the gap simply stops closing and you will see that too. Either way, you are not going to learn it from a headline. You are going to learn it from a number that moves 1/10 of a point at a time. Number 3 was Bitcoin, and I said on Saturday that Bitcoin breaking down would end XRP's run regardless of the XRP specific story. Bitcoin did not break down, it went up, and XRP fell anyway, which is the thing I want you to sit with because it removes the easy explanation. If XRP had fallen on a red Bitcoin day, that is just beta and there is nothing to discuss. XRP fell on a green Bitcoin day, which means the selling was specific to XRP in exactly the way the buying was specific to XRP 3 days earlier. So the mechanism has not changed at all. There is a bid and an offer in this asset that is not coming from the broader crypto market, and over the last week it has been much larger than the market's own moves in both directions. That is what a repricing looks like while it is still finding its level. It is not a trend yet, it is a market arguing with itself about what this asset is worth now that the legal question has moved. And arguments like that take weeks, not days. And I want to spend a minute on the difference between a repricing and a trend, because I keep using both words and they are not interchangeable, and which one this is determines almost everything about how you should be thinking right now. A repricing is what happens when new information arrives and the market moves quickly to a new level to account for it. It is usually fast, it is usually violent, and once it is done, it is done. The asset is not going up anymore, it has simply arrived somewhere else and stopped. A trend is different. A trend is a sustained flow of demand that keeps arriving week after week, and it does not need a fresh headline every day to continue. Here is why that matters practically. If last week was a repricing, then XRP at $1.50 is roughly where it now lives, and the interesting question becomes what it does over the next 3 months rather than the next 3 days. If last week was the opening of a trend, then a pullback like Monday's is just the first place people who missed it get a chance to participate. Those two scenarios look absolutely identical in week 1. They both produce a big candle and a pullback. The only thing that separates them is time and the slow signals, which is precisely why I keep dragging you back to a moving average gap that moves 1/10 of a point at a time instead of telling you a target. And I want to be clear that I do not know which of those two this is, and neither does anybody else who is publishing right now. That is not me hedging. That is the actual state of the available information 9 days into a move. What I can do is tell you exactly what would distinguish them and then bring you that measurement repeatedly until it resolves. That is the entire job. And on the thing that started all of this, the position is unchanged from Wednesday, which is itself the story. The Clarity Act has not passed. It has not been signed. A president asked the Senate to move on it. The market repriced roughly 50% on the asking. And since then, there has been no legislative development at all. That is worth repeating every single time until it changes, because the entire foundation of this move is an expectation about a future event, and expectations decay if the event keeps not arriving. Watch the Senate calendar. That is the actual catalyst, and it will not show up on a chart until after it has already moved the price. And here is the week again with XRP taken out of it, because I want to correct one more impression from Saturday. Ethereum up about 30% on the week, Stellar around 22, Bitcoin around 22, Hedera about 20, XPR about 12. Every one of those is a strong week by any normal standard. XRP led at around 47%, and leading a strong market is a real achievement. But it is a different claim from moving while everything else stood still. The full week was a sector rally. The decoupling was a 2 or 3 day event inside it in both directions. And because I asked you earlier to demand this of anybody giving you a price target, it would be pretty poor of me not to do it myself. So here is what would change my read, stated now rather than after the fact. I would move toward calling this a trend if that 50 to 200 day gap closes meaningfully over the next few weeks rather than the 1/10 of a point it has managed so far, and if the Clarity Act actually gets a floor vote scheduled rather than a mention. I would move away from it if XRP loses the level it broke out from while Bitcoin is holding up, because that would tell me the specific bid that drove this has finished and there is nothing underneath. And if the second one happens, I will say so on this channel in exactly those words, the same way I opened tonight by telling you where Saturday's framing was incomplete. I would rather be the person who tells you a read broke than the person who quietly stops mentioning it and moves on to the next headline. You can check whether I do that, and you should. So where does that leave us with 4 things that are all true at the same time? And that is the same position I gave you on Saturday, which I think is worth pointing out. The move was real then and it is real now. The trend was unproven then and it is unproven now. 3 sessions of violent movement in both directions did not settle the question, and anybody whose view flipped completely between Saturday and tonight was not holding a view, they were holding a direction. And I want to come back to XPR Network one final time because I think it is the most underrated thing on this board, and it is not for the reason people assume. XPR is useful to me right now precisely because it did not participate. It is a small cap on the same ledger family with the same broad narrative, and it captured about a quarter of XRP's move. That makes it something close to a control group. If this were retail euphoria washing across everything with an XRP adjacent story, XPR would have run hardest because thin order books always exaggerate. It did not run hardest, it barely ran at all. And that rules something out for me. It says this was not a retail mania because a retail mania does not carefully allocate itself to the most liquid, most regulated, most ETF wrapped name in the family and skip the small cap. What moves like that is money that has a mandate, and mandates care about liquidity and regulatory clarity in a way that enthusiasm does not. I'm not going to overclaim from one data point. But if you are trying to understand who has been buying, The fact that the small cap sat still is a more informative signal than any headline I have read this week. So what am I watching from here? And it is deliberately the same thing I named on Saturday, the gap between that 50-day and that 200-day. 8.8% tonight. I will bring you that number every time I sit down here, and I will bring it to you whether it is helping my read or embarrassing it, because a number you only cite when it agrees with you is not evidence, it is decoration. As always, none of this is financial advice, and nothing here is a price prediction. Every figure I have shown you is a live number with a source, and the moving averages and the RSI I calculated myself from daily closes so that you can pull the same data and check every one of them yourself. Please do that, especially when you disagree with me. If this was useful, hit that like button, subscribe, and ring the notification bell so you catch these breakdowns as they come.